Well, Afrimat reported a 23% rise in full-year headline earnings per share to 77 cents. Company also saw revenue increase 34% to 1.3 billion rand. Now, joining us to unpack the numbers further, Andries Van Heerden, CEO of Afrimat. Morning, Andries. As a big picture comment, we've got a couple of other companies giving numbers this morning, Mazor and Esau Frankie. Sounds to me like construction's looking up.
David, yes. I think we've made the turn. It's not fireworks out there yet. I think the guys that are showing good results are the guys that position themselves strategically, and we're happy with the results. But the market isn't easy yet.
Yeah, you say revenue up 34%. That's always a nice number to have. Headline earnings up 22%, also a good number. One phrase that struck me was growth from diversification. So You're not just sitting there waiting for contracts. Yeah. Diversification through acquisition?
Yes. David, if you look 3 years ago, we embarked on this trail of acquisitions. We were a company very narrowly focused in the construction sector. We then acquired the Glen Douglas mine. Thereafter we acquired the Clinker Group, which is a niche product business, and then we acquired the controlling stake in InfraSource lately. So we've diversified the business quite heavily over the last couple of months.
Andries, these acquisitions and acquisitions looking forward, maybe what kind of price are you looking to pay? What price have you paid for these acquisitions?
We did exceptionally well. Looking at the Glen Douglas acquisition and looking 2 years down the line, we probably made about an 80% return on our capital in this year. And in the case of Clinker, we probably made around 40%. So the prices that we've been paying is actually quite good.
With a possible churn in the construction industry to the upside, things looking a bit better, do you think there's still room for some more consolidation in the sector?
I think there's a lot of room for consolidation in the sector. From an Afrimat perspective, we had a big picture, an end game that we had in mind, and we are very, very close to all the acquisitions that we had targeted. Now it is for rolling out the bigger plan.
You've talked about costs like fuel and electricity that everyone has to deal with. So regardless of your growth through acquisition or more contracts, you've got to manage that very carefully.
Yes. Yeah, in the traditional aggregates business that we used to have, we were under pressure. On the cost side, we saw all these cost pressures from labor, from electricity, diesel. And on the other side, on the pricing side, due to the competition in the market, it wasn't that easy to pass that prices on. So if it wasn't for the strategy of a couple of years ago, it would have been a lot more difficult for us.
It sounds like if you diversify, you can diversify too much in the sense that you have a core business, then you have other related businesses which make sense. You start getting to the point where you say, actually, maybe you as the chief executive or your executive say, we don't really know this business that we've got into. Isn't that a possible risk?
It is a risk. We had to decide very closely what our core competence is, and that really is open pit hard rock mining, especially smaller mines. That's what we do. So everything that we've done was in that line. What we have done is we diversified slightly into more niche products that has a higher margin and has a better sustainable income stream.
Prospects in the next year or two, this time next year, are you going to be looking at similar revenue and headline earnings?
We think that the future ahead of us is good. We are comfortable that we've positioned the business very well. We think we're hedged against the risks that we see. We've got a very strong balance sheet, so if a storm should come, we should be able to weather that. So all in all, we're comfortable with the business and looking at the prospects. Yes.
Andries, who's the marginal buyer out there for your extra product produced?
Well, it's such a wide product range or market range that we can go more into industrial markets when we see the opportunity into construction. Because of the niche nature of a lot of our products, we see that in certain areas we have capacity constraints. So if we bring the capacity up, we can actually sell more, for instance, into the ready mix markets.
What keeps you awake at night at the moment? What's the biggest problem facing the business?
I think any South African business would be concerned about the labor situation in the country. We are doing a lot of work to try and create a unique culture in our business that ensures that the labor relations go well. We did have a lot of pain in our KZN operations in this year that's just passed. That would be the biggest risk, and then the normal country risks that we see.